We've all heard the age-old saying that history always repeats itself. Almost everyone remembers the dreadful crash and collapse of 2008. As we get further and further into 2022, this saying rings truer and truer by the day. In the last 2 years alone, the median home price in the US has risen at the fastest pace ever in history. The average monthly rent cost has increased a whopping 26% since 2019. And mind you, this is just the average increase across the nation. To put things into perspective, with the California exodus of major corporations like Tesla, Google, Amazon, and Facebook, Austin, Texas has seen over a 108% increase in rent alone, which is the highest in the country. We've also seen a massive rise in inflation with a record of 9.1%, which is the largest increase in the last 40 years. Higher inflation means costs of commodities like steel, concrete, and lumber go up, ultimately causing home prices to continue rising. Which is why today we're going to explore the rising concerns of the next housing market crash. In this video, we'll cover why it's happening, what to expect, and how to prepare for what some say will be the worst market crash the world has ever seen. So stick around towards the end of the video because we share 5 ways to prepare for the next housing market crash. Also, don't forget to subscribe to the channel if you find value from this video or would like to see more content like this. It helps us know which type of videos to keep making so that you can continue having a great edutainment experience. On the morning of September 15, 2008, the lives of millions changed forever. The once thought too big to fail financial firm called Lehman Brothers officially filed for bankruptcy, which was later considered the domino that began the collapse of the entire market. Lehman Brothers was the 4th largest investment bank in the United States, with approximately 25,000 employees worldwide. Due to Lehman's large stake in real estate and subprime loans, they got hit the hardest during the subprime mortgage crisis. The subprime mortgage crisis happened because there was a large expansion of mortgage lending with low interest to high risk or less qualified borrowers. In other words, banks were carelessly lending money to home buyers who were unlikely to pay back the loan. Essentially, real estate was booming and banks caught FOMO, not wanting to miss out on any of the action. Eventually, the supply of homes was too high and the demand to buy was too low, which caused home prices to plummet. September 29, 2008 was a day that the Dow Jones fell nearly 777 points, which, until the crash of the COVID-19 pandemic, was the largest in history. Unemployment rates peaked at 10% nationwide and hundreds of billions of dollars were lost collectively. Ironically, the events that occurred back in 2008 are eerily similar to what we're seeing today. After the COVID-19 crash, mortgage rates fell drastically to all-time lows of just 3%. For a short period of time, we even saw negative interest rates issued by the Federal Reserve to help prop the market back up. Contrary to most people's belief, this was seen as one of the greatest investment opportunities to the upper and middle class, as every asset on the market was essentially on sale, especially the housing market. With rates so low, everyone has been in a real estate buying frenzy and the housing market has been booming ever since. Sound familiar? Now of course, this can't go without saying, what goes up must come down. There are always 2 sides to the coin. On one side, homes were dirt cheap, rent was deferred, everyone got to work from the comfort of their home, and money was virtually shoveled into everyone's pockets at no cost. At least so we thought. With such high influx of money circulating, this ultimately caused the value of the US dollar to decline. This is what caused the massive inflation rate increase and caused goods and services to become more expensive to purchase. And as I mentioned earlier, this high inflation has caused an increase in cost to purchase things like lumber, steel, and concrete, which are all needed to build new homes, apartments, or businesses. In order for contractors and mortgage lenders to turn a profit, they needed to increase the price of the home. Unfortunately, this has been disguised as an increase in property value, which in some cases is true. But what happens when the demand for the supplies go back to normal or even below normal levels? What happens when the market has too much supply and this high demand for buying a home ceases to exist? This is what we are now seeing in real time. It's evident that we are in a massive housing bubble yet again. Housing costs and rent is too high, interest rates have increased, housing cost increases not matching the working class wage growth, property taxes have reached unprecedented levels in states such as California and many others. These are all simply signs of disaster yet to come, and many don't see it or even realize it. If you just look at the data, there's a high probability that we will soon see housing prices collapse due to oversupply. But what can you do? What should you do? If you truly heed the warning signs and actually look and compare the data across history, you may just be able to dodge the storm that is heading towards so many of us. And that is why we've literally scoured the internet for all the best resources, tips, examples, things that we can find, and we've actually compiled a list of just 5 things that you can do. And these are all recommendations that come from real estate experts and economists. Number 1, don't get caught up in the hype of buying a home. Now, I truly hope it isn't too late for this, but the best rule of thumb to follow is to never pay more than a home is worth. Now, it sounds like a no-brainer, but when there's so much hype around buying a home with low fixed interest rates, it can become quite easy to slip into your emotions and try to justify why you should outbid other buyers. Simply just don't do it and walk away. Tip number 2, increase your emergency savings fund. Try to add more money each month to your savings or investment accounts. We actually recently made a video that explains in depth how to make more money during a recession or market collapse. Be sure to check it out after this video. Tip number 3, be mindful of your budget. If you are in a market for a home or just wanting to spend for everyday life, be sure to create a strict budget and not spend frivolously on toys and trinkets. When life hits the fan, life can become quite unpredictable, so it's best to keep your head, or should I say your wallet, on a swivel. Tip number 4, if you're a current homeowner, work towards making a large down payment on your home. Doing this will increase your equity and available funds to use in case of a crisis. Building equity in your home is one of the main reasons so many choose to buy a home in the first place. It's also one of the most popular ways to build wealth. So if you are a homeowner and you truly want to prepare for a collapse, increase your equity as soon as possible. Tip number 5, look at refinancing your home as an option. Your current mortgage may be backed by a previously high interest rate, so it wouldn't hurt to look and see if you could refinance your home at a much lower rate. Although this would re-extend the time of your loan, it should seriously lower your mortgage, which in turn should free up some capital to either 1, invest, or 2, throw back into the home to increase the property value even more. Now, I'm absolutely positive there are dozens of other methods you can pursue to make sure you dodge a collapse. I just wanted to make sure these steps were as simple and easy to follow as possible. I found that many experts and economists ironically are saying that there's very little to no chance that the US will experience a collapse like that of 2008. And this is mainly due to changes in legislation and lending practices. They claim that a decline in home prices is healthy and normal as the market needs to naturally correct itself. This claim isn't all that far-fetched, however. History has shown that the housing market peaks about every 18 years before experiencing a crash. But if you ask me, it still sounds like a bunch of fluff to prevent panic, but hey. This could actually explain why so many investors are choosing to sit on cash, waiting patiently, just to buy up real estate and other financial assets at the best prices. Even hundreds of Reddit users are touting about how they can't wait for this collapse, and that this bubble should just hurry up and pop already so they can get sweet deals. Regardless of the data, no one truly knows what the future holds, or what will in fact occur. But one thing is for certain. We all have opinions and we all have decisions to make. So, what will you do in the event of a housing market crash? I'd love to hear your thoughts in the comment section below. Thanks for watching. As always, this is Mr. Influence signing out. Stay sharp, my friends.